What's going on, podcast family? Want to thank every single listener out there tuning in to the Stocks is Talking podcast with Ibn Getz. Very quick disclaimer, everyone. Please keep in mind, Ibn Getz, we are not financial advisors, people. We are simply two guys that love investing and we love to talk about it. At the end of the day, it's important to trade at your own risk. It's important to do what's best for your portfolio and always use discretion when trading in the markets. Welcome, world. Welcome to another edition of the Stocks is Talking podcast with Ibn Getz. I'm your co-host, Ib. Getz, what's going on?
What's poppin'?
Everything, cuz everything is lovely, everything is good. I'm ready to jump on. This is what? Is this episode 5?
I think we might be at 5.
That's a milestone, people. A milestone. We 5 in. We 5 in, dropping jewels, having some great engaging convo. I've been loving it so far. We both new to the podcast game, but we've been crushing it, if I do say so myself, Gantz. What you think?
I do say so.
Hey, so let's just get right into it. Here's what I'm thinking. Doge is now down to 23 cents, or is it 25 cents? Let me check. Doge is at 25 cents. Gets, I've bought a whole bunch more Doge because it dropped down to 16 cents a couple days ago. That was like my Doge. I think there was a Doge day one day last week.
Yeah, 420. 420 was Doge Day. Yeah, they turned it into Doge Day now.
They turned it into Doge Day. And if you know, 420 is not typically Doge Day. But some investors say we're going to make 420 Doge Day as well. But here's the thing. It didn't go as planned, did it, Getz?
Nah, not even close.
They were supposed to, I think they were supposed to push it up to $1 was the hope. And what ended up happening, I think the day after 420, it was down to about 16 cents, I think was the lowest it got to. And I ain't gonna lie to you, I was buying when it dropped to 27 cents. I bought when it dropped down again to 25. I bought more at 22 cents when it hit 16. I was getting in more. Why? Because you buy on the dip, you sell on the tip.
Right.
Those are stock strategies, but crypto, I figure I'm gonna implement the same thing. Now, of course,
investment strategies. It's not even a stock strategy. It's just an investment strategy.
It's investment.
So it is.
Even in real estate, it's all the same. So I was buying that dip heavy. I'm already up a little bit after buying on the dip because it's back up to 25 cents. But I'm hearing a lot more about this petition to get Amazon to start accepting Doge. I just saw a story about this girl, this big time financial girl that blew up in the crypto. She bought some tickets to a Mavs game with Doge, so they kind of have a story out on her experience with that. I'm a believer in it only because I see that there's value being shown in Doge, and right now it's still so cheap. So I'm jumping in, Getz. I don't know how you feel about that.
Yeah, I bought a little more, but and I just had a conversation with somebody about this. Okay. I believe in it more. I mean, the use case is proven itself. It's being used in more places. Yep. So, and it's inflationary. I mean, I think it'll actually make a very good currency. My only thing is, as far as it going to $1, like the conversation I had with somebody, I told him straight up, I said, maybe we have a run to $1. And then all those people that were in super early before a penny, they start selling out. And then, and it drops off. And then it's going to find its level. And then it's going to be a currency like any other, We'll be looking at Doge versus the dollar or whatever, and, maybe it's at 25 cents, maybe it's at 50 cents, whatever it may be. Right. I mean, the use case is there. So I don't see it going nowhere,
So when you said the use case, you're meaning in terms of, like I said earlier, somebody used Doge to buy Dallas Mavericks tickets. So when you say use case, meaning how can you go about using this crypto? Is that what you're referring to? Okay.
Yeah, exactly. That's man. I mean, it makes sense as a currency if you look at fiat currency, if you look at the dollar, if you look at all these currencies. I mean, it's kind of the same thing when you look at Doge right now. That's how I'm seeing it.
Right. So Doge is doing. I'm interested to see where it's gonna go. Are you familiar with SafeMoon? And I'm sorry, I know I'm jumping right into the crypto because how I'm feeling. Feel free to cut me off and get into the stocks. I'm on crypto. We can take it wherever we want. SafeMoon. Are you familiar with that?
SafeMoon, I keep hearing about it, but I don't know too much about SafeMoon. You're going to have to tell me about that one.
So here's what I know about SafeMoon. It is at tenths of a penny right now, and a bunch of people are dumping in money for it. and I just read something recently where they have over 1 million users now of this SafeMoon crypto. I'm not gonna lie, I don't really know what it means. I just know SafeMoon seems to be that new hot topic, that new hot crypto that everybody's kind of if you know kind of thing.
Right.
Like one of my homeboys who was in it prior to last week when I got in, he was making $14K off of it.
Right.
Off of this crypto. So I'm like, all right, let me get in. Because I know you mentioned on the last pod, you was in on Doge when it was at tenths of a penny.
Right.
And now here it is at 25 cents. And we're wondering if it's going to get to $1. Well, I know this. I have 22 million shares of SafeMoon off of $100 investment. So if this thing goes to $1, it's a wrap, guess. Yeah. I'm not working no more. Go ahead.
Yeah, no. What I was gonna ask though, because I did a little research on it yesterday, and the supply on it was something crazy.
But there is a finite supply, no?
Yeah, it was a finite supply. Okay. But the way it was broken down, I know you was trying to explain to me how to buy it, because that was my thing. I never bought it because I didn't know how. And
mad complicated.
Yeah, it was super complicated. I'm like, I just didn't have time for it. So, but my issue was with it is you have this crazy supply, even though it's finite, and it didn't seem to have any utility whatsoever. And like you say, one of your people's is up, whatever it is, 14,000, whatever. Is that where they, if they wanted to, can they actually liquidate it
into cash money?
Cash money, because I mean, with the amount of users, I would think that right now you probably could. But it's one of those things I worry about, because you can have on paper, you can have crazy unrealized gains, but when it comes to actually time to cash out, is it liquid enough for you to cash out? That's one thing I was wondering about.
That's a good point, Getz. And I'm not even 100% sure what it looks like, because I haven't sold any of the cryptos that I'm in, not just SafeMoon, all of them. I've yet to sell them for a realized gain. I just have them, they're all unrealized, as we say. And when we say unrealized, it's simply when you purchase a stock, it might say plus 500 or negative 400. So you're up $500 or you're down $400. But you've never really made money or lost money until you exercise that trade and sell it. Once you sell it, then you're selling it for a realized gain or a realized loss.
Yeah, it's the same thing. All these CEOs and stuff and founders of companies, right? Jeff Bezos worth $190 billion. That's on paper. If tomorrow he cashes it all out and he gets $190 billion, then he's worth $190 billion. Right now, he's worth it on paper. That's what it is.
That's a good point. That's a good point. Something I was actually, I gotta say, the Stocks is Talking podcast with Ibn Getz, we're making traction out here, because I had somebody that's been listening to the pod. She asked me a couple questions with regards to, like, hey, I just got into stocks. When do I sell? And it seemed like such a minor question, or like simplistic, but it's real, because a lot of people get into investments and it's like, all right, well, when do I sell it?
Right.
And she was like, do I just wait till it goes all the way up and then get out? Do I sell it when I'm losing $20? And honestly, I told her it's all about doing the best for your portfolio, because as we always say, we're not really financial advisors. We want people to always use discretion when you're trading and do what's best for you. But what I did tell her is, before you buy a stock or buy a crypto or anything, you got to have your exit strategy already.
Right.
Because that way it makes it a lot easier for you. So if you're going to go and do what we talked about in the last episode, where it's about what percentage of money am I up, or do you want to go buy a dollar amount? I want to make $20. If I'm up 20, I'm out.
Right.
Or I want to make 10 to 20%. But I just thought it was an interesting question because she was like, you know what? I think when I make $1,000, that's when I'll get out. She was like, what do you think about that? I said, again, it's all up to what's best for your portfolio. If you're comfortable with that, then that's your strategy. Then you rock with that. But then you also have to learn how to minimize those losses, risk management. So if you want to make 1,000, but now you're down 500, you've got to calculate that as well.
Right.
So it's not just about how much money I'm up will I get out, how much money when I'm down will I get out.
Yeah. So and why are you in it in the first place? You know? I mean, why are you in it? I mean, if you look at these companies and you're invested in a company and you say, I'm gonna get out when I'm up $1,000. Well, what's the catalyst that's gonna get you up $1,000? Why did you invest in the company? Something to think about, you know? Yeah. If you're doing it off of news or rumors, you know, things like that, then we went, you know, we talked about it, you know, buy the rumor, sell the news, you know. So then if you're looking at when you get to a place of parity, right, when it's on CNBC, when it's being talked about in the news, when it's big, then it's time to get out. So what if you haven't hit your $1,000 yet? If that's the only thing you're looking at is I'm gonna get out when I'm at $1,000, but you get to that place of parity, and then you're not up $1,000. You're gonna hold it,
right?
Now everybody, the world knows now. You know, so this is if you hadn't thought about it and you're still holding, now you're gonna end up being a bag holder.
Yep.
Everybody else, the news is out. Everybody's selling, and you're sitting on it. So now you're the bag holder.
Waiting for that. No, that makes sense. So it all comes down to, like you said, knowing why you in it in the first place. But I will say a lot of times people get into stocks or crypto in the first place simply off the strength of they've heard other people saying they're getting in on this. So they buy. It's not really an informed, educated decision. It's more of following the trend of the people around me. Right. So if you're one of those people that are just following the people around you, then you really got to do your due diligence once you get into that trade to really do some soul searching in terms of how long do I want to be in this and when am I going to get out? Because if you're just jumping in with no prior knowledge of this stock, you really have nothing to base it off of. You're just kind of...
you should probably, and if that's the case, you should probably ease into something. You know, like I think I mentioned before how I'll buy a stock and that's how I'll track it. And then, you know, all right, now I bought it. I didn't have time to do my due diligence ahead of time, but I bought 1 or 2 shares. I'm tracking it now. And as I'm tracking it now, all right, now when I get a chance, I'm going to do my due diligence and figure out, do I want to stay in it? Do I want to add to that position? What do I want to do with it? You know, but even if you're just buying because people around you are talking about something, that's the rumor.
Yep.
So, all right, cool. You got in now. You know, it's just like, you know, people all the time come in there talking to me about random stocks and crypto and this and that. That's the rumor part of it. Now, when I turn on the TV and that stock or that crypto is on CNBC or it's on your regular news channel, it's on Fox or something. All right, now I think I'm done. Now I'm gonna go ahead and get out of it because now they're blasting it out to the world. You know, so maybe it gets a little bump while it's on the news,
but it's gonna inevitably consolidate.
Exactly.
Settled. Yep.
Right. So I don't want to be the bag holder. I want to take my profit. So when the rest of the world is learning about something and they're all scrambling to get into something, I want to be the guy that's collecting those coins.
Right.
You know, and then I can get off to the side. You know, it's just like we talked about, you know, be greedy when others are fearful, right? And be fearful when others are greedy. When you have that euphoria, once you get to that place of euphoria and people who have no idea, who know nothing, don't want to know anything. All they know is they just heard about it. When you get to that point, well, that's when I'm like, all right, I want to take a step back.
Right.
Because now now everybody's being greedy, thinking that they're going to become millionaires. So, all right, now I want to be a little fearful. I want to hold on to some of my cash. Mm-hmm. For that day when things start to go sideways, and those people who don't know any better, they all start pulling their money.
And as they're pulling, you're
prices are dropping.
Yep.
Right. So now I'm buying.
Yep. Exactly. You're doing the opposite.
Yeah. Now I got my, I got the shopping cart and I'm filling it up. Give me a little Apple, give me a little Tesla, give me a little of this, a little of that. Oh, Bitcoin's down, Ethereum's down. All right, cool. Now's the time.
I bought them all.
Yeah.
I bought Bitcoin when it dropped back down like 49,000, 48,000. I got some more.
Yeah. They're down today too.
I did not. Yeah, they're down today. I haven't bought any more today. I'm kind of chilling on it, but I've purchased in on a lot of these cryptos on the dips. Mm-hmm. One thing, so I had another person call me with regards to the pod and like, hey, love what you guys are doing. I'm thinking I have my granddaughter who loves to, she'll get money. She wants to spend it on bags and this. I want her to listen to the pod so that she can kind of get some understanding of maybe investing, whoop, whoop, whoop. And I didn't tell you about this, Getz. Actually, you're just now hearing about this on the pod with the rest of the world. But
world premiere.
Yeah. So no, we're definitely getting out there. But one thing I told this woman, I'm not gonna put a name out there, was if your granddaughter is into buying bags or shoes or whatever she's buying when she gets all this money, and you want to introduce her to investing, tell her, hey, that's great that you like Louis Vuittons or Coach bags. What company owns Louis Vuitton and Coach? Right. Why don't you invest into those companies? So even if you want to buy the shoes, now that you're buying the shoes, you're putting money back into your pocket in a way because you now own a part of that company.
Right.
So I think that's a big piece for people who are out there. You're not really into the investing. You haven't gotten your feet wet, but you're interested and you don't know where to start. Start with the places that you shop at on a daily basis. Yeah. If you go to Walmart and Target consistently, look into the stock. See what the stock is doing. What have they been doing over the last year or so? How has that stock price been going up and down? Is now a good point for you to maybe get into it? Because you've been shopping at Walmart and Target for years, right? So you know they're not going to go bankrupt.
Right.
You have an iPhone, right? You've got all these Apple products. Why not buy into Apple?
And even if you don't want to do the research, the fact that you could say, I've been shopping at Target and Walmart for years, why not start buying them? Where they going?
That's all the research you need, right? They're sticking around.
Right.
You're still going there. Through the pandemic, you've still found your way to Target.
Right.
You probably ordered something online. They were open. Through the pandemic, after the pandemic, they will be around. That means that they have a good, solid, fundamental basis to continue to flourish. Am I wrong or am I right?
You're right.
So Preach. I think that's hey man, I think that's a nugget though.
Yeah.
Like if you're new to the investment game, just start with the places that you shop at. And I'm not talking about the bodegas around the way. I'm talking about those high-end chains like a Walmart, like a Target, like a Louis Vuitton, like a Coach. All of these different designers. Look and see if they're tradable on the market. That's the basis to start.
And you'd be surprised who owns who.
You would be surprised who owns who.
When you start looking into these companies and you find out that it's the same company owns Moet and Hennessy and all these I think it's Louis Vuitton, whatever it is, they own 5 different companies, have nothing to do with each other, and but it's all the luxury brands you buy and what you're sipping on because you saw it in a video, they own it all. It's like
they own it all.
There you go.
It's a conglomerate. You just want your little piece of that pie. And this is that way of, I think, one constant, consistent kind of key phrase that I've been throwing out there, that you've also thrown out there: smart money. This is part of that smart money investing. Even if you're a newbie in the game, you can be a smart money investor by just looking at the landscape of what you do on a daily basis. Who are you spending your money with? If you're spending your money with them for the last few years, I can guarantee you there's millions of other people probably doing the same.
Right.
Which will let you know, why don't I invest in them? So as I'm spending money with them and all these other people are spending money with them, they might start putting money back into my pockets. And you really get a bonus if that company pays dividends. Because now you know every quarter you're definitely getting something from them. I know one of the big ones for you is Home Depot. You love them as a dividend stock.
Oh, hell yeah. Yeah. And now, you know what? That's because of you. Because I remember having a conversation with you and I was like, the stock's too high, you know? And the more I was like, the price is just too high on the stock. I want to buy them. I want the dividend, but the price of the stock is too high. But then the more research I did and I looked at the actual yield, you know, the percentage they pay per year. And I was like, the number's actually kind of lovely, you know? And I went and I started investing in them, and you know, I put them in the M1 pie, but I also had started investing, you know, individually in the stock, and I had built up a decent size, you know, interest in the company. And you know, when I would get those alerts, you know, like you know, that dividend payment would come through, and I'd be looking at it like, damn. You know, you know, because I'm like, I'm definitely beating the bank with this, you know, and I would just reinvest it. You know, now I'm out of that sizable position. I still have them in the pie, you know, in my dividend pie. But they did right by me, you know, and I think I had mentioned to you the other day, you know, and you know, I used to, I would also trade options on them at the same time, and then I would take that money. Every time they would have a dip, I would buy into them, buy options. And then as they would come back up, I'd sell those options, take the profit, and then I would invest that into the company.
Now you're increasing your dividend. Every time they pay out, now you're getting a little bit more.
Yeah. The number just kept going up. You know, and I was like, this is crazy. You know, when I finally sold it, you know, it was a sizable, you know, portion of just my Robinhood portfolio, which I didn't want a Robinhood portfolio. It just ended up being that way, you know, because I just kept increasing it, you know, and then I finally sold it just to free up cash so I could trade, you know, and I was like, this is crazy, you know, and I almost didn't want to sell it because I didn't want to give it the dividend, you know, you know, but like I said, it's still in the pie, so I'm still getting that. You know, it's just not going to be as crazy because I got to the pie is split up between so many companies, you know, and I'll build it back up to that. But it is what it is. But yeah, I love Home Depot, you know, and it gives you, it gives you a reason to do what they call a channel check. You go into these companies that you go to anyway, right? Your normal store that you go to. Now you're actually paying attention to what they're doing.
Yep.
You know, so when I go in Home Depot and I'm like, okay, they don't sell Ego lawnmowers and stuff no more, you know, and those are my favorites. They make some of the best stuff. But why aren't they doing that? And who's selling it now? Okay, Lowe's is selling it. All right, now I got to keep an eye on this situation. I'm not a fan of, you know, that movement. You know, you do channel checks. You pay attention to. Yeah, you pay attention to what's going on.
Your notebooks, people. Jot it down. Channel check. Pay attention to who you're shopping with, who you're doing business with.
Right.
Pay attention.
Yeah. Now, because now you're an investor. You're a part owner of that company. So now you're paying attention to what that company is doing. You know, and when they're doing something you don't like, now you're gonna actually look into it. Why are they doing this? And do I still want to invest in them now that they're doing this? And you get to vote. You got to vote. You have a voice when you're an owner.
That's what I was going next.
Yeah, I get all the Apex clearing paperwork, and I get yelled at because it's all coming in the house. You know, I got all this stuff coming in the house, and it's telling me I need to vote on new directors, you know, new members of the board, and this and that, and you know what they're doing with shares, and you know all these things. I constantly have all this paperwork coming in, but because you're an owner, Maybe you're not used to that, but now you're an owner. Get used to it.
Yep.
You have a voice. You have a say. You know, you can go to the quarterly, the shareholder meetings. You know, that's your right. You know,
listen to the earnings calls. Listen to what these other investors are, the kind of questions they're asking, and the kind of answers that are being provided. That's going to give you a lot of understanding of that company.
The biggest part. That's the biggest part of the earnings call. It's when the company can say whatever they want to say, right? They have a presentation they're going to give at the beginning of the earnings call. They're going to say, we did these numbers and this and that, and this is what we think. You know, this is our guidance. This is where we think we're going to be. But the nitty gritty of it is when those analysts start asking questions. So, and you want to hear, you know, because now it's off the cuff. It's not a script, you know. And I find it funny when some companies, I think they don't think about what they're saying, because they'll say, you know, they'll be talking. They'll be like, "Well, what we said during the script," and it's like you're admitting to the script. I don't want a script. I want you. Okay, I understand the numbers. That's scripted. You already know what the numbers are, all that. But during all of that, so you're saying that was all a pre-written, you know, it was ready to go speech. But when the CEO comes on and he's talking, I like the CEOs who are just off the cuff. They just talk. Yeah. You know. But whatever. All right, that was scripted. Now you got to answer questions.
That's where you really get to dig in. Because those questions, you don't know what these investors might ask. And they've got to be ready. Now, one thing I've learned when I listen to a lot of these calls, that CEO will field some questions, but he might jump out there and say, you know what, let me refer you to such and such from the other department to jump in. So they're very smart in knowing, I'm not going to put my foot in my mouth on this call. Let me put such and such who is in charge of this division to put their foot in their mouth, but they probably won't, because they're probably trained and ready for this question. But I'm not.
Which is right. And there's nothing wrong with that, because that means your CEO has a good management team around him. If the person he refers a question to can answer that question in an intelligent way and give you the answer you were looking for, right? Because one man don't make up a company.
Nope.
He's got to have a team around him. So, you know, if you got
your team is only as strong as the weakest link.
Right. So if you got a good CEO and then he's got a good team around him, you know, obviously, you know, it all comes down to the board of directors and the chairman and stuff like that, because they're the ones who put the CEO in place and all that. But if you got a good CEO, then you got a good board.
Yep.
And he's going to have a good team around him. And then hopefully you have a trickle down effect, you know, as far as the employees going down the line, because
it's got to trickle down from top to bottom for true success. Yep.
Right. If your CEO's on point, he's not going to allow failure. You know, he's not going to allow the person who is just slacking and doesn't care. He's not going to allow them to stay a part of his team.
Yep.
You know, even if the guy's stocking shelves, because he's not gonna be there watching the guy stocking a shelf, but he's gonna make sure that the people he has around him understand that guy stocking the shelves who doesn't care. If he don't care and you allow that, well, then you gotta go. And the guy above you gotta go. And you know, it's gonna be like a show, like the Oprah show, except for people getting fired. You know?
You get to go.
Yeah, you know. That's what it's going to be.
That's real though, and that's a lesson not just in stocks or these earnings calls. That's a lesson for anybody in business, that you're trying to grow your own company, grow your own team. Everybody has to be on the same mission, the same train of thought. Because if you have a mission of you want your company to be the number one resource for X, Y, and Z, but the people under you could care less. They're just here from 5 to 9 to get their $25 an hour. Then they got to go.
Right.
Everyone has to be on board. Everyone has to look at your company like it's their company. They wanted to see it succeed as much as you do. And that's why it's so hard to build a company. And I don't want to go too far left. This is a stock investing podcast, but you've got to make sure the people on your team have those same missions, values, and objectives in order. Because if they don't, you're gonna fail.
You're gonna fail
every single time. Or you can stay mediocre at a certain level. You can stay solid at a certain level where it's just you. For me, with my company, I've actually finally got one person under me now, and I know she has the same values and objectives and the same work ethic that I do. So I feel very confident allowing her to communicate with my clients because I know who she is and what she's about. And she's about the same things I'm about. And as we build, we've got to have those same people in place. Same thing with these companies. So when you're listening to these earnings calls and these people are answering questions real fugazi like, that tells you something about the longevity of that company. That you might want to just get in and get out. Because they might not be here 5 years from now. Or they might not be here on the same level of success that they are right now. Because their team is sloppy. Sloppiness you can't have.
Real talk.
Real talk. Today's episode is brought to you by Nice Touch Editing Services. Nice Touch Editing is your one-stop shop solution for all of your content writing and editing needs. Whether you're an author looking for an editor for your book manuscript, you need a resume and cover letter to go after that new job opportunity, or if you're a small business looking to go after that latest government contract, Nice Touch Editing is the premier writing and editing solution. Feel free to reach out, www.nicetouchediting.com. Nice Touch Editing Services. Now that's a nice touch. At the end of the day, at the very end of the day, the point is we all want to be smart money investors. So even if you're a newbie in the game, you're just starting off, take a look at your surroundings right now. Like you're listening to this podcast, look around your room, look around wherever you are, and take note of the things you've been buying and find that common denominator. Okay, all of this is coming from this one company. That lets you know you've been shopping there, they're doing well. Why don't I do one of the tips that Getz gave me in episode 2, which was I'm going to go into Google, type in Target, and after Target, I'm going to type in IR for investor relations. That's going to give me just some basic tidbits on what's going on with them from an investing standpoint to give me some kind of knowledge to know, okay, I've spent my money here. Here's what investors are doing. Now I can start to make a smart money decision based off of my lifestyle. You feel me, Getz?
I feel you.
So that's what I really want people to take note of in this pod. Like, take a look at what you've been doing, what you've been spending your money on, and try to find a way to flip it so that you're now putting that money back into your pocket.
Right. Yeah. And speaking of earnings, since we on it, right? I want to do a little bit of vindication.
Okay.
Because you always come at me about this.
Okay. I don't know where this is going.
Snap.
How dare you bring up Snap to me, Getz? What you got to say about Snap?
Yo, I still wasn't a fan of it. That's what I'm gonna say first. But the growth still ain't there. I'm not. That's just where I'm at with it. But I will say, they did better than expected.
Okay.
I think they were they still had a little bit of a loss, which I have an issue with at this point in the game. They've been around a long time, but the revenue's going up. The user growth was still very slow. It's barely there in my opinion, but they had a good quarter compared to what the expectations were. So you always
surprised. I've been called that.
Yeah. So I'm gonna go ahead, and I just want to bring that up, just so
you're gonna take your L like a man, Getz, and I appreciate that. I respect you for that, Getz.
Yeah.
I love to hear it.
Yeah. I'm never gonna consider Snap. No, for me.
Hey,
I did too well on Home Depot to consider Snap a L.
no doubt. But you know
You
what?
know?
Since you took that L, I'm gonna vindicate you right here on the spot, Gets.
Okay.
Because this is something we talked about on the last pod, and we even put a clip out on our socials. If you're not following us on IG, you're fucking up. Instagram, IB_Gets_podcast. Facebook, Stocks is Talking Podcast with Ibn Gets. That's us on socials. We're also on Discord. Gets will tell you about that later on. But we talked about Netflix earnings on the last podcast.
Yes,
and we
did
a whole talk about how the competition is a little too stiff. The fact that people aren't sitting in the house because people are getting out more now that the COVID restrictions are lifting. And on top of the fact that we have HBO Max and these other platforms that are incorporating movies that are in the theaters with their streaming platforms, but Netflix
Disney Plus.
Find a way to do it.
I'm gonna plug Disney all day, y'all.
Disney, come be a supporter, come be a representative of the Stocks is Talking podcast. We need you. But the whole point is, Gets, we talked about the fact that Netflix might miss on earnings because we're not seeing anything to say that they're growing. Subscribers, all that. We put the pod out on Monday. I believe earnings came out that Wednesday, and I said on the pod, I'm gonna go get a put option just in case they tank after this discussion gets. And this might be a new segment for the Stocks is Talking podcast, where we were right, where we were wrong. We were so right.
So right. That was a huge miss.
Huge miss.
Huge miss. Yeah, I mean, what matters when you look at Netflix, what matters is the subscribers. That's the number that matters. So even though Netflix is profitable at this point, nobody cares about that. What they care about is the users. What was the growth? And the growth was a huge miss. I mean, don't get me wrong. The churn, the amount of people, churn is when you have people canceling and things like that, right?
Okay.
So the churn number was low, right? So there wasn't a lot of people who were coming on the platform and then leaving. But the subscriber growth, I mean, they might as well have been Snap. It was so low. They weren't doing anything. It was super low. Huge miss. I mean,
they plummeted. They went from 5. I'm guesstimating. They were at like 560, 550. Earnings hit after hours. They were down to 499. They dropped 50, 60 bucks. I'm so mad at myself, Gets, because I said on the pod, I'm gonna look and get a put option before the market closes. I think it was Monday or Tuesday. I wanted to put, mainly because we had talked through it so well and so meticulously, and it was such a smart money investment discussion on Netflix. I was like, you know what? I trust what we do and what we say on the pod, or what we just say in conversation. I'm gonna make a put play off of that, and I forgot to, and it hurt me. And I think I sent you a text, and we were texting each other as the news was coming out on Netflix subscriber miss. Like everything was a miss, and they were just plummeting, and I was so hurt.
Yeah,
because I didn't take our advice, Gets.
Yeah, and you know what? I mean, you're a business owner. We both busy, so I ain't knocking you too much for that. Because I didn't do it either. And I wish I did, honestly. And I don't play through earnings, but it was the same deal. I was sure about that one.
It made sense.
It just made too much sense. And it was they missed and they dropped. I think we might have been texting like that night.
Yep.
And then even the next day, they were still dropping. They were still down. Even now, for the last week, they're down almost 8%. So I mean, it was a win. If you jumped in that one, you won. Congratulations. I mean, there'll be there's always tomorrow. There'll always be another one. Yeah. But that was one that and that's, we talk about going through these companies and having that understanding, and that was it. We went through the whole thing. We broke the whole thing down. And you know, one thing that we didn't talk about, and I thought about it after, was you know, you have they call pull forward, right?
What is it?
Pull forward.
Pull forward. Okay.
Pull forward. So we had COVID last year.
Yep.
So you got to think about the fact that all of a sudden everybody's in the house. So the growth that you might have expected on Netflix for the next year or 2 years, all of a sudden everybody's in the house. They're like, you know, maybe I'll just get Netflix, you know? So they had the growth last year. They had it already. And you know, and the price ran up on the stock and everything, and they've been doing well. So now you got to think, if people are going back out, that they're gonna take that breather. You know, I mean, it was inevitable. You know, I mean, the fact that, I mean, they hit profitability last year, which was unexpected. Why did they hit profitability? Because they had that pull forward. They had all them people that were stuck in the house who decided they were gonna get Netflix, that it was worth paying for. You know,
so pull forward. Off of what you're saying, it sounds like it's a deal where something unexpected happens that causes this company to benefit.
Right.
Exactly. That's the gist of what I'm getting from it.
Right. Yeah. Yeah. I mean, and there was a lot of companies last year that had that pull forward. It was, all right, you know, everybody stuck in the house. It was the same thing with home renovations. It was the same thing with Netflix, with all these companies, you know. People started fixing up their houses because they were stuck in the house looking at it, right? So you know, you had Home Depot and all these other companies. They had that pull forward. It was we weren't expecting people to do these things for so long, or to have so many people doing these things, that all of a sudden they all came, which is why we have shortages, all these things, you know, because pull you have forward. That pull forward. Yeah, you know, something changed.
That
there was a
catalyst.
Have
been accounted for.
Right. You had that catalyst, you know. So when you have that catalyst, you gotta think about that, you know. And you know, speaking of the catalyst, right? So now we're reopening, right?
Yep.
So now, what companies are gonna have a catalyst? Now you got reopening. You know, I've been looking at Disney. You know, which is Disney's. I ain't gonna lie, Disney's killing me right now because they're just trading so sideways, right? But I mean, it is what it is. It's not, you know, we ain't hit summertime yet. But one that, you know, people may not think about is like the alcohol companies, right? Bars were closed, clubs were closed, all these things were closed, right? So the only way for them to make money is the people who went in the store and bought in the store to take it home, right? Yep. Now these things are reopening. Now that all the stadiums are opening and all that stuff, right? So now you can look at a company like Molson Coors, TAP, right?
Anheuser-Busch.
And yeah, you got these companies where now those things are opening. You know, and that's called on premise, right? When you go to a commercial venue and you buy these things. So last year they weren't making no money on premise. They only made money from the retail side. But a lot of these companies, they make more money on premise.
Gets you dropping jewels. You dropping jewels. Keep going.
You know. Yeah, so now these things are opening. Well, now you got to look at it, right? Now you got these companies. It's like, all right, now they have on premise. Now you can walk into the bar, walk into the club, and you can buy your drinks. So now that money's coming back. Yep. So now's the time to look at, all right, what they do for earnings last year? How they do? How they survive, right?
And how are they going to benefit now that on premise?
Exactly. Is it a catalyst? You know, and some companies, it's also during this time, how did they adapt? Because if they adapted, well, now they're gonna have even more of a catalyst. You know, like you look at Molson Coors, Tap, they have the Rock Drop, the energy drink, right? Mm-hmm. And energy drinks is huge. I didn't even realize how big Monster Beverage was. Monster Beverage is it's a monster, right?
Like how you did that, Gets.
Yeah. So Monster Beverage is the growth was crazy, right? So now, all right, The Rock, who is this, he's just marketing, genius. Anybody who, they want to make money, I put The Rock in whatever you're doing, right?
Anything he touches turns into gold.
Right. So now you look at, all right, now he's got a drink out. He's got a energy drink. I hear that's moving crazy. He's got to deal with Molson Coors. I think they're like the distributor or bottler or something like that, right? All right, cool. They got another deal with Coca-Cola. That's good dividend play, right? Coca-Cola, good nice and steady. Play.
Okay.
They got a deal for Topo Chico, right?
Topo Chico.
Okay. Topo Chico is, I don't know, some kind of carbonated water drink or whatever, right? People love it. Coke bought the company, but then they made a deal with Molson Coors to distribute like the alcoholic versions of this drink and this and that, whatever, right? And they have a bunch of different versions of it coming out. So, they have, all these different drinks, and they have this deal with Coke. So, all right, now that's another catalyst. You've got the Rock energy drink. You've got the Topo Chico drinks, which I think there's a few different versions of the drink, and they come in all different flavors, And then they have their other drinks that they're coming out with. And now On Premise is back in style. So they've got a bunch of...
be flowing.
Yeah. You got a bunch of catalysts, So, and that's just something to think about. Just like I think I mentioned on the last pod about I did the play on Lyft.
Yep.
Nobody wanted to get in a car with a stranger. You know what I mean? Everything's closed, right? So Lyft and Uber and all these companies, they were hurting as far as, well, I shouldn't even say the companies were hurting. Maybe they were doing all right. I think Uber might have done better than Lyft because Uber has Uber Eats. Lyft just has,
Uber
Lyft
Eats
doesn't
took off as a monetizing platform for Uber.
Right. That was a catalyst.
It was a major pull forward for them.
Right.
Everyone being back in the house, not wanting to go out, they wanted delivery. Okay, Uber Eats delivers. We use it. Me and my fiance use it all the time still.
Yeah.
I know for a fact.
Yeah, we were doing the Grubhub thing, and maybe I should have looked and seen if I could do something with that. But Lyft didn't have that. Mm-hmm. So now there's less rides, there's less revenue for the drivers, less revenue for the companies, right? Unless you have a delivery side of it. Well, now everything's opening. Now these companies like Lyft, they're like, we don't have enough drivers. So now, that's why I made the investment in the options on Lyft. And, I made my money, and honestly, I would have stayed in it, but my window for that contract was very short.
Okay. So when did it expire? When did you buy it and when did it expire?
I don't remember. It was during that last couple of weeks.
Okay.
During the before the last pod.
Okay.
But I think I only had like a few weeks on it.
Okay.
So
you had to move quick.
I had to move quick because there's a time value to your option, right? Yep. You have your theta, right? So I didn't want that time value to decay. So
time decay is crucial. I gotta hold you on this one. Time decay is crucial if you're trading options, and let's say your option expires 2 weeks from now. That option is not going to be as valuable a week from the time that you bought it if it expires the following week, because the time decay will minimize the value of your option. So you've got to look at that when you're doing options. You've got to look at the time that you have on. This is why before you get into an options play or any kind of a stock play, know what your exit strategy is before you get into it.
Exactly.
You don't want to get into an option that expires in 2 weeks and you find that you still have it a week and a half later. because a week and a half later, even if the stock has gone up a good amount, the fact that that option expires in a few days, that time decay is going to suck the value out of the profit you're making.
Right. And that was my thing.
To know that. Yep. Go ahead.
Yeah. So, and that was my thing. So I was up a good chunk of money. So I got out of it. And I said, you know what? I'm going to continue keeping an eye on this company, because as summertime comes and everything, and people are starting to move around, you know, when you go to another state, you got to decide: are you gonna take a Lyft, or you gonna rent a car? Either way, there's a catalyst for Lyft. There's a catalyst for the rental car companies, right? And my thing was, I'm looking at, you know, like I've been looking at rental car companies because there's a shortage of vehicles, right?
They're selling cars now. A lot of those rental companies, they started selling to make up for the lack of people renting during COVID. They just started selling cars outright.
Now, here's my thing, though. They started selling cars during COVID, right? Now things are opening. Now they don't have enough cars. Now they're trying to buy as many cars as they can. Like you had Hertz, which went into bankruptcy, right? So you got to think. You've basically taken one player out of the equation, even though they're still out there. They didn't go under. They went into bankruptcy protection. They're still out there. They sold a gang of their cars, right? And I got to watch this firsthand, just from what I do. So they were selling off all their cars. So, all right, well, now they're not even really a competitor in my mind.
Right.
But and Enterprise is privately owned, you know.
Didn't and then you've got that.
Yeah. And now you've got Avis. Avis is a public company. Now Avis, you have this company that's publicly traded who doesn't have enough cars, who actually, somebody gave me some info today, let me know, Avis, it's so bad, instead of buying from the dealers, there's not enough cars to buy because, you know, the manufacturers allot certain cars for rentals, right?
Right.
Well, that's how it used to be. Maybe they changed it, but it used to be, all right, this version of this car is for the rental car companies. It would be like some cheap version that didn't have no, you know, nothing in it. Avis has gotten to the point where they're buying cars from the auction.
Okay.
Because they just doing what they got to do because they need cars, right?
Yep.
But in the meantime, because the demand is so high and the supply is so low, you could go get an economy car that might cost you 2 or 3 times what it used to cost you. Right? Maybe more. Right? Especially you go to a hot spot, you go to Miami or something like that. You might go get a Ford Fiesta and it might cost you $600, you know, for a day or something like that, right? And you're like, I'm not paying that, right? But are you though?
Yeah.
Because you need to get around.
Yep.
And you're out of town. You're on vacation, so you're like, all right. So you pay for the Lyft.
Take what you can get.
Take what you can get. So you could pay for the Lyft, which is a shortage on that side, right? So you're gonna pay more for your Lyft because it's like, remember surge pricing?
I do, man. I used to be a Lyft and Uber driver, so I know exactly about surge pricing.
Yeah, I did my thing with that too. So all right, surge pricing. So this is surge pricing 2.0. Right? There's just not enough drivers at all. Right? So you're going to pay more if you catch the Lyft.
Yep.
Now think about it. You're on vacation for a weekend in Miami. You're going to pay more for every ride, everywhere you go. Or you rent the car and you don't know what you're going to pay. Or you rent the car and you know what you're going to pay. And even though you're getting gouged, you know up front that they've been
how much they're gouging. You know what time it is. You can prepare for it at least. Right.
You know, they handed you the Vaseline up front. So it is what it is. Right?
Right. Yep.
You already got that out the way. So it just is what it is. But they both have a catalyst. You know what I mean?
Is key.
That's key. Right?
Yep. And that pull forward, and am I saying it right? Is it pull forward?
Pull forward, yeah.
I think that's crucial just for moving forward for any kind of investor, beginning, intermediate, expert, you want to look for those pull forwards and understand what companies can benefit from this pull forward. What companies can benefit from the fact that we're now all stuck in the house? Well, Netflix. Well, what companies are going to benefit now that we're all going back out the house?
Right.
I'm going to say airlines, cruise lines, rental cars, Lyft, like all these different things. Is so key to keep your ears to the streets, to the economy, to what's going on, to look for those pull forwards. Look for those catalysts that couldn't have been accounted for that happen, and understand, how can I get in? COVID happened, vaccines are coming out. It's a pull forward. What companies benefit from that pull forward? Johnson & Johnson, Moderna.
I don't know. Johnson & Johnson out here killing people. So,
but when the rumor came out that they were coming up with a COVID vaccine, I'm sure they shot up. But now that we're kind of in the midst of we're seeing all the right. So you ate off the initial pull forward. Now, yes. And again, that vaccine thing is a whole nother discussion. I ain't getting it. Not now. Right. I'm not going to be that test subject for this new vaccine they just created 6-7 months ago. And I'm not even going to get too into it, Getz. I know you kind of feel like I do. I'm not messing with it. But with regards to the stocks, it was a pull forward, because you can look at these companies like, okay, let me look at these companies that are now coming up with new vaccine treatments or something with regards to COVID. Yeah. So those pull forwards are so crucial. So if you take nothing away from this conversation, take away the pull forwards, take away from it, look at what you've been buying over the last couple years and start investing into those companies that own the products. Those two things are so crucial. If you take nothing else, those two nuggets will get you in a good place.
Yeah, and you look at the catalyst, right? So you got the pull forward, you got the catalyst, right?
Uh-huh.
So your catalyst is what causes that pull forward, right?
Yep.
So you also got to look at the companies who learned to innovate during these times. And one of those companies that had earnings was Chipotle.
Ooh,
and
I'm an investor.
Yeah, I'm an investor in Chipotle, right?
Okay.
I've been a fan for a while, and just how they've been doing business after they went through the hard times where everybody was getting sick from their food and this and that, whatever. And for a while I was like, I'm not touching that company, right? Because
I got sick off Chipotle a couple years ago. I ain't gonna hold you. I was hurting for like a week and a half, and I don't think I've eaten it since.
Okay, so this is my thing. For the longest time, I was like, I'm not messing with that company. Mm-hmm. And then when I actually started looking into the company, after they started moving, right? I did a little research on the company, and I saw a bit of a shift happening.
Okay.
So I finally decided to invest in the company, and the company has done me lovely.
Okay.
I mean, just they've been killing it, right? Over the last 5 years, up 232% over the last 5 years. I've been invested in the company for a year or two. I got no complaints. So my big thing, and this is well before the pandemic, Chipotle decided to invest in digital, which reminded me of Facebook investing in mobile.
Okay.
So remember when Facebook, remember that when we talked about this in one of the pods before, right? Facebook figured out how to monetize mobile, right?
Yep.
Chipotle figured out how to monetize digital, which is funny to say because it's a it's a restaurant, right?
Right. So are you saying like food delivery? Is that what you mean when you say
it's not just food
digital?
It's not just food delivery. It's just ordering online, ordering on your phone, right? Ordering ahead of time, stuff like that, right? So this company, I seen them trying to figure that out, and I seen them doing a pretty good job of it, right? Now all of a sudden you had COVID, right?
Yep.
So this company was already in the game. Now they took this catalyst and they doubled down. This earnings call that they just had, digital sales were over 50% of total sales.
Damn.
Which means instead of them having to, because you think about it, if you walk into a restaurant or a store and you deal with the employee there, the entire time you're dealing with that employee, it's costing the company money. They're trying to get to the end game where they get to cash out, right?
Right.
Now, so there's a expense, for
overhead.
There's an overhead for the building and the lights and everything they do, right? There's also an overhead for the consumer. Consumers cost money, right? You think about it, whether it's advertising, whatever it may be, consumers cost money.
That's such a unique perspective. Even as a business person, I never thought of it like that, but that makes so much sense. Consumers do cost money to get them to consume your product.
Right. It's not for free. It costs you something.
Yep.
So if somebody walks in to a Chipotle and you have to sit there and tell them your order and maybe they don't hear you or whatever it may be, there's a whole process to it, right? You're taking that person's time, but the company's paying for that person's time, right? So that lowers the margin.
Right.
But if Chipotle can get you to go on your phone and click some buttons and put your order in, and then it prints out on a piece of paper, and then they could just look at the piece of paper and fill the order, well, now that costs them way less.
They're slashing those overhead prices tremendously.
Right. And they're increasing their margin. Right?
And that's what you want as a business, to be profitable. That's what you want.
Right.
Slash overhead, increase margins.
So a couple of things that I noticed with Chipotle, because I listened to the call, a couple of things that I noticed that I was really feeling, not only did digital, which has a higher margin, that increased to over 50%. But then at the same time, their delivery, which had a lower margin, there was a bunch of costs associated with that. They increased the cost of that, incrementally, but I think it ended up going up 17%. Right?
Okay.
And so now you say, damn, you're like, you're not feeling that because you're hearing it, right? But they didn't announce it. They increased the cost, however they did it. The people who still used it paid more, so it protected their margin. Right? They protected the money that they were making on that side, but at the same time, on the digital side, the people who ordered online and then walked in and just picked up the order and left, that went up.
Okay.
So their numbers were incredible because they protected their margin. They increased the margin on one side with digital, because you may not have even walked in. You might have just went through the drive-through, which is another big thing. They've been increasing drive-throughs.
They're increasing contactless transactions, and that's the name of the game for everyone. Even me, I have digital business cards now, contactless. You don't need to take a card, hold it, just scan it with your phone, and all my info will pop up.
Right. And the fact that they're doing that, I was just like, I made a good investment. You know what I mean?
You made a smart money decision, guess, is what you did. Today's episode is brought to you by PT Solutions. PT Solutions is a business consulting firm offering innovative solutions to help strengthen your business. Now, what does that mean? It means infrastructure. It means support. It means coaching. It means development. It means advertisement. It means ensuring that your company gets to where the money resides. Contact PT Solutions today to get started. www.dcbizpros.com. SafeMoon.com. And at the end of the day, if we're making smart money investments, we're doing the right thing. We're doing something right.
Hell yeah.
And I bring that up. I got to bring it back to, you talked about Coca-Cola earlier. You talked about Coca-Cola, and I just want to throw something out from the investor of all investors, Warren Buffett. I came across a story where an individual was in a room with Warren Buffett, and he talked about how Coca-Cola sold X amount of millions of cans of soda each day. X amount of millions. He had done his research, and he knew that for a fact. People are buying millions of these cans of soda. So you know what he asked me what he did, Gets. What did Warren Buffett do?
What did he do? Let us know.
Warren Buffett bought Coca-Cola. He bought Coca-Cola and raised the price a penny. That spoke volumes to me, Gets, because that is the epitome of a smart money investor. Right. He's done his due diligence. He sees that this product, they're selling millions of it every day. Okay, well, I have the capital to buy your product outright. I'm going to buy you, but then I'm just going to raise the price a penny. And for the average consumer, going from, and I'm just throwing this number out there, going from $1.29 a can to $1.30 a can, it doesn't make that much of a difference for the consumer. But for somebody that just purchased Coca-Cola and raised the price a penny, because as I mentioned, they're selling millions of cans every day, right? So now those millions of cans, he raised it a penny. So he's making millions of dollars a day. Smart money investing, Gets.
Yeah.
That's what we want to do.
Yeah. I mean, and you think about it, you talk about someone like Warren Buffett, who he doesn't own Coca-Cola outright. He owns a good amount of a decent amount of the company, right? And he collects that dividend, which is so smart for someone with so much money to have in a company, and he got into it so long ago. So you're making money on the appreciation of the share price, and then you're making money on the dividend, especially as long as the dividend's increasing. You know, because I mean, and you know, I've had this conversation with people before about how great that is as far as when it comes to like Coca-Cola, right? Because the company's not going anywhere.
Nope.
You know, they invest in, they will acquire other companies, they will make the investments, you know, so that the dividend remains. You know, just like with the alcohol companies, you know, we talked about on-premise and retail, right? It's the same thing when you talk about a company like Coca-Cola. When you walk into the bodega, when you're in the stadium, when you are at the movie theater, right? There's Coca-Cola.
Yep.
All right, well, now the movie theater's closed, the stadium's closed, but the bodega's still open. You can still buy the Coca-Cola there. Yep. But when you're, you know, at the event, you know, you can't go to the event anymore, right? Because of COVID. So they lose there. But then Coca-Cola will do something like, you know, like I was talking about earlier with buying Topo Chico.
Yep.
Right?
Okay.
They'll buy this other company, you know, that has, and that's another source of revenue. You have the upfront cost, you know, but if Topo Chico is huge and people are in a store looking for Topo Chico and they're buying it, all right, now they have another source of revenue. So Coca-Cola will keep paying out that dividend. So if you're somebody who, like Warren Buffett with Berkshire Hathaway, who owns, you know, I think it's over 6% of the company. Well, now you're getting dividend on that, right? So, and
that dividend is huge if you own that percentage.
Right, that dividend is huge, and all you got to do is continue to hold.
Yep.
The shares of that company, you know, and then and think about it, right? Today is 6%, but then tomorrow, if they say we're going to buy back shares, your percent that you own of that company becomes higher because they took shares off of the market.
Which means that your dividend becomes higher.
Your dividend becomes higher. You know what I mean? So you're just eating all around off of that company. You know, because you're an owner of that company. You know, so that's a huge one to me, and that was another one that I invested. I'm still invested in Coca-Cola, but for a while I did the same thing as I did with Home Depot. I started building up the shares, and I actually did my due diligence, so I knew what my price target was. So my thing was, as long as it was below $50, I would be buying more shares.
Okay.
And then when it would go over 50, I would just sit on my shares. You know, but during the pandemic, while they were like, all right, well, you know, on premise is down and this and that, you know, the stock price would be depressed a little bit. So it would keep dipping under 50. And I'd be like, all right, well, all right, here's a shopping cart. Just, you know, it's just like being in a grocery store. Instead of buying the actual product, I'm buying the shares.
Yep.
Right? You know? So I kept buying up shares and they kept paying me the dividend. And I'm like, all right, cool. You know, you paying me the dividend. Now I'm going to buy some more shares, you know?
And you keep paying me the dividend. Yeah, just keep going back and forth.
Right. You know, now now you pay me more on the dividend. Now I'm going to buy some more shares. You're not, because they're not going nowhere. You know?
Dividend stocks, people. If you don't know what a dividend stock is, look it up, Google it, do some research, do your due diligence, find the top, just Google top 10 dividend stocks 2021. Just put that in the Google search, because you've got to put in your own research. We're giving you some good game. If you really want to get this money in this investment market, you got to put the time into it. Take the time to look into dividend stocks, because that will pay off in the long run.
Yeah,
it'll pay off. You've got to do it. You've got to put some time into it, some effort into it. Gets. I want to bring one thing back up, if you don't mind.
Let's do it.
SafeMoon. And now I'm going back to crypto. I'm not gonna lie. I'm not gonna hold you. I've been really into the cryptos lately, and I think I said on the last part, I've been looking more into the cryptos than my stocks lately. And I have quite a few holdings, but I've been really watching crypto. And this SafeMoon thing is the latest craze that I'm into. It hasn't blown up yet, but if it does, your boy Abe is going to be sitting good, Guts, and the people listening. But SafeMoon was such a nuanced purchase. And I want to kind of walk people through what I went through. And again, I'm a beginner when it comes to cryptocurrency. I'm not an expert. I'm not someone that's been doing it for years. I just got into crypto about a month or two ago. I just got SafeMoon last week. But I hear people talking about it. But this was the first time where I couldn't just buy a crypto with my US cash. I had to buy SafeMoon with another crypto. So it gets very complex. I'm going to do a quick rundown. If you're interested in buying SafeMoon, you can jump on YouTube and just YouTube how to buy SafeMoon. And there's a bunch of videos that'll pop up. What I did, I'm going to just give you a quick rundown. I did not buy. I downloaded an app called Trust Wallet. You familiar with that, Guts?
No idea.
Okay. So Trust Wallet just allows you to buy and sell and exchange cryptos. So I downloaded Trust Wallet. From Trust Wallet, I had to purchase BNB, which is Binance, the Binance crypto. I know you know about them.
I know about them.
You know about Binance. So
yep, I get alerts every 2 seconds about Binance.
There you go. So I own some Binance too, because I had to purchase them to get SafeMoon. So I bought Binance, but then once I purchased Binance, I had to go to an app through the Trust Wallet app. You go to your browser and you type in PancakeSwap. PancakeSwap is an application that allows you to transfer one cryptocurrency to the next cryptocurrency. So I went to PancakeSwap and I took my BNB, which is Binance, that had a certain value that I put like $130 on it. So my Binance, I then swapped for SafeMoon. And I'm sorry, I got to take it a step back. Excuse me. And again, this is all new to me, people. I purchased Binance on Trust Wallet. From Binance, I had to transfer that currency to a currency called Smart Chain. But it's still a version of Binance. It's like Smart Chain BNB, Smart Chain Binance. So I went to the Trust Wallet. I purchased Binance. I transferred Binance into Smart Chain Binance. From there, I went to the PancakeSwap app. Once I go to that app, I took my Smart Chain Binance and swapped. And once you swap it for SafeMoon, you have to go back to the Trust Wallet to enable SafeMoon. Because SafeMoon, I guess, isn't enabled on the Trust Wallet. So you have to enable it first. So now that you've enabled it, if you go and look at your Trust Wallet, you'll see X amount. And for me, I have 22 million shares of SafeMoon right now.
Now here's my issue.
Okay.
And you break this. Maybe you know better than me.
Or maybe I don't.
Oh, maybe you don't.
But hit me.
The process is crazy to me, right?
It is. Yep.
Now you go through you jump through all these hoops.
Yep.
You get the SafeMoon. And it's supposed to be a finite supply, right?
Correct.
Okay. Even though the supply is some huge number, I don't know what it is. It's in the trillions or quadrillions. I don't know what it is. But you have this crazy high supply.
Mm-hmm.
So, okay, you jump through all the hoops. You got the SafeMoon.
Yep.
And now you have it. Now, when you go to sell it, if you decide to sell it, let's say you have it. They decide there's going to be a SafeMoon day, right? Right. And it actually goes as planned, right? SafeMoon goes to $1. Now you're up 22
if
million.
If SafeMoon goes to $1, I'm making 22 million. I'm done. I'm not. Hold
on. That's what you say, but hold on. Now there's a fee, ain't there?
I heard. So I'm hearing it's like a 10% fee if you have to sell SafeMoon.
Okay, so now there's a 10% fee, and I hear the fee gets broken up. So part of the fee goes, because SafeMoon's thing is they want you to hold it. Mm-hmm. You're not supposed to sell it, right? Mm-hmm. That's the big thing with SafeMoon is it's made to hold.
Yep.
So now you decide it's at $1. You're gonna buck the trend. You're gonna sell it, right? Because you're what do they say? There's diamond hands and there's paper hands. Now you got paper hands because it's at $1. You're up 22 million. And you are not a cat, right? So you decide you're gonna sell. So now you got to give up 10%. So I mean, which is great for everybody.
10% of 22 mil. I'm fine with that.
Yeah, I wouldn't have no issue with it either. But now, first things first, you got to have the liquidity, right? There's got to be enough buyers for you to sell 22 million of it, right? That's my first thing. All right, that you jumped that hurdle. There's enough buyers. Now you got to give up the 10%. So now that 10%, now I hear part of it goes back to the holders of SafeMoon, which is lovely. If I'm still, let's say I get in right now, I got in behind you, and I've only got 18 million, right? And now they break that up, so I get a piece of your sell, which, I'd send you a text and just thank you, right? So I would get a piece of it because I own SafeMoon. And I think maybe 5% or maybe it's only 2.5%. I don't remember what the amount is, but so I would get a piece of it, but then a piece of it goes back to Binance. So it's like a kickback. So my question to you is that a catalyst for Binance?
It's definitely a catalyst for Binance, in my opinion, because, and again, I feel like SafeMoon is going to end up being the wave. It might take some months, it might take some time, but eventually SafeMoon is going to be like the new Doge, where everybody wants to flood into Doge. And right now, most people, they're buying SafeMoon through Binance, which means that Binance, by nature, is the catalyst. Because if you're buying SafeMoon, you got to go through Binance. So you're increasing the value of Binance just to get to your end game, which is SafeMoon. So when we talk about catalysts, like you talked about early in the pod, that's the epitome of a catalyst,
right? In
my opinion. So yes, Binance and SafeMoon are kind of feeding off of each other. Mainly Binance is feeding off of SafeMoon. Hey, you want SafeMoon? That's fine. Just come through BNB, which is the symbol for Binance. Come through us and you can exchange it for it. Now, I did hear there are other ways that you can purchase SafeMoon without going through Binance, but I know a lot of people, that's kind of how they've gotten to there. And that's how I went through it.
And I want to know what's the other ways, and if Binance still gets a kickback. Is there, like, you know what I mean? Is their deal so exclusive where no matter how you buy it, they still get a kickback? So
that's something to think about. That's something to research.
Yep. Yeah, because if they always get a kickback, because the way that it was explained to me was, they get a kickback on their sell. So if that's the case, then the way I would understand it is, they're gonna get the kickback no matter what.
Yep.
So if they're gonna get the kickback no matter what, and you think SafeMoon is the new wave, then that would mean that maybe Binance, which their coin is crazy expensive anyway.
It's like 500 plus.
Right. But then maybe I should invest in that, because if SafeMoon is the new wave and it's gonna hit some crazy number,
then Binance is the new wave by association.
Right. Because when SafeMoon hits that crazy number, then you're gonna have
selling.
Everybody's selling because you're gonna have, because who's gonna not take profit when they bought in at 100th or 1,000th of or a 100,000th of a penny or a millionth of a penny, right? They got in super early, and now it's at 50 cents or it's at $1. Who's not gonna sell when they have? It's not just life changing; it's generational wealth, right?
Yep, generational wealth. Right now, if that thing hits a penny, I would make 100 to 200 racks.
Right. So this is my thing. Right. So it hits a penny, and you're gonna be up $100,000. You're not going to at least sell a part of it.
And if you're not going to sell part of it, Binance is getting a kickback.
Right. It's the way I understand it. They're going to get a kickback. So that would mean that the Binance token should be rising too. Right. So that's a catalyst for them. So I'm just trying to understand that. And I haven't bought any. I'm trying to understand it. You're probably gonna have to explain it to me 3 more times, but I'll probably buy a little bit.
Here's the crazy thing, Guts. I'm still learning. I don't understand it. I'm not gonna lie to you. I don't understand what I'm doing, but I know that I own it. I know I have 22 million shares. So if by some chance it does shoot up, I'm at least in on the wave. But it's all very cryptic to me. I don't really understand crypto. I'm starting to understand Doge a little bit more, because I know people are at least using it to purchase tangible items.
It has a utility.
It has a utility. People are using it to go to a Dallas Mavericks game. People can use Bitcoin to purchase a Tesla. So I can understand that as a currency with value. A lot of these other cryptos like Ethereum and Doge and ADA, I don't really quite understand the utility, but I know these are the top 10, 15 cryptocurrencies or digital currencies that are out there. So I'm just buying in. Like, all right, I'm gonna get in. I'll understand it once I sell and make my profit. Then I'll go back and understand what I did.
Right. I mean, with Ethereum, I mean, there's still a lot of questions for me with Ethereum, but I mean, the NFTs, you know, the biggest wave for, you know, the NFTs, Ethereum, I think is the biggest market for NFTs. I think there's other ones. I think you sent me something earlier. There's other ways to do NFTs, but Ethereum's the biggest. I'm
about to create my own NFT, cause
see, no, it don't work that way. We got a par. We in this together. So it's not a you or I. It's a we, right?
We about to create our first NFT because I already know what I'm about to use. I got an autographed hoodie from this rapper Toby the Wigway. If you know, you know. I'm going to turn that autographed hoodie into an NFT, and I'm about to sell that thing for millions. I promise you, I'm not even joking. All that stuff I sent you earlier today, that's what I had in my head. I'm going to take this hoodie, digitalize it, turn it into an NFT, and put that thing on the market. It got his signature on it. He's blowing up as a rapper. Like, Toby is kind of, I don't know if you heard of him.
I've heard of him.
Doing this thing. I got a hoodie with his signature. I'm about to turn it into an NFT. Who gonna stop me?
I ain't gonna stop you. I just want to cut.
I got you, cuz. I got you. And I still don't even understand NFTs. I did a little research. It's all very nuanced still. Cryptos, NFTs, I get it. It's like you can take signatures or digital cartoons and characters, artwork. It's all kind of things you can do. Like I heard people were selling, like there was a LeBron James dunk that was turned into an NFT that people profited off of. That's all good and well. I'm just gonna turn my autograph hoodie into an NFT.
Yeah, which you know what you know what my question is, right?
What's up?
If I take a picture of LeBron James, whoever, right? If I take a picture of this celebrity doing what that celebrity does, and I turn it into an NFT and I sell it, do they have the rights to
get a cut of it?
Yeah.
That's a good question. Because when I sell this Toby hoodie, he might want some money off of it. I'm down to break bread, but you know.
Yeah, I mean, he gotta break it 3 ways, and his you know, his cut's gonna be the smallest. But you know, that's, you know, I ain't gonna hold you.
Doubt.
But
no doubt.
So, but my thing is, right now, let's say the paparazzi takes a picture. They sell that picture. The person they took the picture of has no rights to it, the way I understand it. So I would assume it'll be the same thing here. But I just be wanting to know. I want to know for sure, you know, because I don't want nobody coming back and trying to, you know, come up off my pockets. Yeah. You know,
that's a good point.
So I just wondered about that. Yeah. You know,
I'm gonna look it up. People, if you listening, look it up for us. Shoot us a message on our Insta, IB_Gets_podcast, Facebook, Stocks is Talking Podcast with Ibn Getz. If you know about NFTs and how it all works, shoot us a message, send us a post, whatever. Let us know.
Yeah,
because it's all new. This is all nuanced investment techniques and strategies that we're learning on the fly with you,
right?
Which I think is the great thing about what we do. And again, at the end of the day, we are not financial advisors. We are not here to tell you what to invest into, what stocks to invest in. We're just 2 guys that love investing and we love to talk about it. But at the end of the day, you've got to trade and do what's best for your portfolio. You got to trade at your own risk. But this is just what we do. It's what we love. Again, follow us on Facebook. Follow us on Insta. Getz, how can they reach us on Discord?
They got to hit us on a social, and we'll send them an invite. It is what it is.
It is what it is, folks. We came, we saw, we conquered.
We out.
That's all. We out.